My name is Stapczynski. I lead Asia energy coverage at Bloomberg News. I have a particular passion for LNG, and on this stage we have an illustrious group of buyers, suppliers, and traders of the super chilled fuel. LNG demand is growing rapidly, and you would think that because of that, there will be enough supply for everyone. But since the energy crisis of 2022, prices of LNG surged to a record high and remain high. That has been a problem not just for buyers, especially those in India, one of the fastest growing markets, but also suppliers as they're trying to find new routes and new places to sell the fuel. Here today, we want to talk about where we can find opportunities for growth and how key importing countries, like India especially, can secure the required volumes going forward to feed their energy needs and rapid growth. Today with me, I'm just going to quickly introduce everyone. We have Abhilesh, the MD and CEO of Think Gas and AG&P Pratham. We have Nakul, the country head for Shell Energy. We have Sandeep, the Executive Director for Gas at Indian Oil Corporation. We have Rashid, the SVP for Marketing at ADNOC Gas. And we have Teresa, the GM for LNG Origination in the Asia Pacific for Chevron. Now, I'm not sure if you've been paying attention to the LNG news. I pay a lot of attention to LNG news, but recently there was a deal signed between ADNOC and Indian Oil for a bit of supply of LNG. I find that particularly interesting. Yes, applause, please. It's a fantastic deal. And I just wanted to open up to Sandeep and ask, how have emerging nations such as India adapted to the LNG market since the 2022 price shock, and how does the deal that you signed over the last few days, how does that play into it?
Well, thank you, Stephen. Well, 2022 Ukraine was really a shocker. It sent the energy prices shot through the roof. And in fact, it made many countries go bankrupt. And during my previous assignment, I was not in gas at that point in time. I know a neighboring country how India, through its aid, rescued that country because of the energy prices. The country was on the brink of getting bankrupt. And let me tell you, the resilience, the kind of resilience which India had, India was able to survive. And not only survive, but rescue the other countries as well. Now coming particularly to how India coped up with the 2022 shock of Ukraine, because when the prices of gas were literally to the tune of $84 per MMBTU from the regular $10 to $12. The first thing which, from the buyer perspective, the customers did was to evolve. Customers in India, like all Indians are, they are very agile. They changed, they shifted. They weighed their options, and then one of the options was to switch over to alternative fuels. Like refineries, we are buyers for our own refineries. Our refineries switched over to naphtha, which was found to be competitive at that point in time, cheaper option. And Morbi in Gujarat, I'm citing few examples. Morbi in Gujarat, where tile manufacturing, it's a main center in India for the tile manufacturing, etc. And it is on natural gas since last 2 decades, I would say. They also switched over to the other cheaper options like propane and LPG. So therefore, agility of customer is one thing which was there to cope up with the situation. But coming to the government's role, government also played a very vital role. So this was the immediate step, the customers, the buyer side. On the government side, they basically intervened. They constituted committees. They came up with pricing reforms. I would say the pricing reforms which through Dr. Kirit Parekh report came after that 2022 shock, where the domestic price ceiling was enforced with respect to domestic price was basically measured with respect to the Brent linked pricing, and the earlier system of going by the other benchmarks, 4 benchmark weighted average, and going by the previous to previous quarters was disbanded, and therefore a ceiling of 6.5 was brought in, and a floor price was also brought in. So that was the government intervention at that point in time. And the regulator, PNGRB, they also came up with a unified tariff kind of a system where the customers were benefited. At the same time, the pipeline operators, they were paid the same compensation which they were getting earlier, but at the same time, the customers were protected against any pricing. Earlier, what was happening was that far-off customers, they had to pay a very huge sum for the transportation, and in fact, the transportation was not very transparent. So through unified tariff, the regulator came in between. But what was the strategic step which companies had to take? I mean, of course, government support was always there. So Indian Oil became a pioneer, and we thought that surviving only on the spot prices will not be, take us through. We know that spot prices were, before Ukraine, COVID was there, spot prices are $4 to $5 per MMBTU. They were very lucrative, and it's okay to make hay while the sun shines, but sun never shines forever. I mean, sun of course shines forever, but there are days, rainy days, when clouds are there. So to protect ourselves, we started exploring the idea of getting into more long-term tie-ups, long-term contracts. And Stephen, in fact, for the last 10 years, starting from, I think, 2016 onwards, there was no long-term contract which was signed by any company in India. So therefore, we started exploring, and ADNOC contract, which we culminated yesterday by signing of SPA. It is a very big contract, 8 to 10 billion US dollar contract for 14 years. This was inked in the year 2023, July 2023. And this contract was the beginning. And let me tell you, after that, we signed another contract. I mean, it was a HOA which we had signed. And then the industry also entered into a contract through, renewal of contract through Qatar. So an opening was made. I mean, a path was shown by India, which truly is an energy of India. And therefore, in last couple of years, Stephen, we, as India, we have signed contracts, all the companies put together, of around 10 to 12 million metric ton, protecting against the pricing. Because pricing in India is a very, this is the main determining factor, because unlike developed nations, we don't have deep pockets. We, for us, even more than competition, I always say, in every forum I say that, more than the competitive pricing, it is the affordable pricing which is important for our country, for India. So therefore, these are the 3-4 steps which we took. And also government increased the area of exploration. The no-go area was removed, and therefore today the exploration India is inviting, government of India is inviting companies, big companies, mega oil and gas companies to explore in India. And in fact, if some find is there is a floor pricing also provided through the pricing reforms. So going forward, we are preparing ourselves for situations like Ukraine, and I'm very confident, God forbids, if another situation comes like that, India will be the country which is going to not only survive but thrive. Thank you.
Thank you, Sandeep. I just want to ask a follow-up on that. You know, you're talking about, you signed this SPA, you're talking about being prepared. What's the capacity for additional long-term deals Indian Oil has?
What is
can you sign more long-term deals going forward? Are you looking to sign more?
Yeah, I mean, say, man is a greedy, man or woman. I mean, human is a greedy animal. So we dil mange more. In Hindi they say that dil mange more. Couple of years ago, we started with 4.54 million metric ton of gas. We were truly an oil company, but not an oil and gas company. So from 4.54, Stephen, we are going to end this financial year very close to 8. I mean, the prices again have become inclement. I mean, slightly on higher side. So this kind of growth is phenomenal. We were known as procurement agency for our refineries a couple of years ago, but now We are not the buyers. I mean, you said buyer, seller, we are the traders as well now. We have graduated to that status. So therefore, Dil Mange More will be, of course, we are exploring more long-term deals because our aspiration is that by 2030, when the country, country goes to around 80 million metric ton of gas, we should have a share of at least 20%. Around 16 to 17 is our aspiration. And to go there, 16 to 17, we need more long-term contracts. And yes, we are using, this forum also, not only this forum, but the India Energy Week also. We are having a number of meetings lined up where we are discussing, exploring long-term deals, maybe now on a different benchmark, maybe Henry Hub. But yes, we are on this pathway. Thank you.
Thank you, sir. Thank you for letting me follow up with a question on that. Now, we talked to a buyer. Let's talk to the seller. Let's go to Rashid from ADNOC very quickly. You know, I just want to point out the Ruwais project. It's the new project that ADNOC FID'd recently, sold a lot of volume, found investors. Just in the matter, what was it, 18 months? Yeah, from conception to FID. What was the I mean, that came after the 2022 price shock. Did you find a lot of interest in that project because people wanted to sign long-term deals like IOCL here? And what was the strategy that worked for you to kind of edge out the competition in Qatar and the United States?
Well, first of all, I'd like to just comment on what Sir said here. You know, we are proud to be in India. We see India's rise and we look at India with admiration. India is taking its natural role in the world. We are on India's doorstep, so it's only natural that we would be looking to serve this market and the great people of this nation. It brings us great pride. When it comes to Ruwais LNG, so Ruwais LNG was born really just before COVID, with the surplus that we had in Abu Dhabi in terms of the gas reserves of the Emirate, with the 7th in terms of reserves globally, and we were looking at ways to monetize these molecules. Ruwais came, we looked at what was happening in COVID, and we thought, hands on heart, how are we going to go out there and how are we going to market? But there's one thing. ADNOC has been in this industry since the 1970s. And what carried us was the legacy that we have on DAS. We've never failed a cargo. We've always delivered to customers. We served Japan loyally all the way up to 2019. And we had a brand. And the brand that we had was a brand of reliability. And it was coming at a time when people were looking for reliable supplies, where people wanted to know that they would get that cargo on the date that had been promised. And that is what drove the conversations that we had. Now, Ruwais LNG is a 9.6 million ton project. We expect it to be about 5-6 billion in capex. It's 2 trains and it's state of the art. It's a low carbon LNG facility. And I think while nobody so far has paid us anything for the fact that it is low carbon, it did indeed open the doors for discussions. People were interested. What are you doing? Why is it low carbon? And what does that mean for us, the consumers, when we're looking at energy transition? We got the partners on board. I think this is one of the very few projects in the world that has, alongside the national oil company, has Shell, BP, Total, and Mitsui in it. So it's really a celebration of this industry where, you know, all the big players came together, giving us that vote of confidence. When it comes to sales, the biggest thing in all of the discussions that we have had is how will you ensure that there will be no willful misconduct. And what we do is we say, fine, we can have that in our contract because it is not something our lawyers, that willful misconduct is not something our lawyers anyway would ever condone. So that's Ruwais LNG in a nutshell.
I mean, there's so much appetite for it. I keep seeing deals being signed. I remember writing the story about Mitsui and the others investing in the project. You say it's 2 trains. What are, is there appetite for 3 trains, for 4 trains?
I leave that to time.
Thank you, sir. Let's jump over to Chevron now. Teresa, thank you for joining us. I just wanted to, Chevron doesn't have a big presence here in terms of an LNG supplier to India, but you're here today, and having spoken to you earlier, you're quite excited about being here today. What's the proposition that India offers? What is Chevron interested in doing here?
Yep. Thanks for the question, Stephen, and thanks for the invitation to be on your panel. Chevron is really excited about the opportunity in India. We are growing our portfolio. Today we have 14 million tons. We're looking to double that by 2030. We're adding 6 million tons from the US exports to our portfolio coming online over the next 3 to 4 years. And when we look at marketing those volumes, we're looking for new markets. And India is a tremendous opportunity for us. Why we like India? India is fantastic from an energy transition and an energy supply perspective. On the energy transition side, Chevron's been helping our customers switch from coal to cleaner burning natural gas for several decades now, and we've enabled that change with our customers for many years. India is embarking on this journey, and we're here to support them on this energy transition. For energy security, what is energy security? When we think about that, it's like the lights are on. We can have public access to affordable energy on a reliable basis, and also while we're meeting our environmental objectives. Chevron is committed to providing affordable, ever cleaner, and reliable LNG, and we feel that India is a perfect market for that. We see the market growing, and we're here to participate in this growth.
Thank you very much. I just want to jump over now to Shell. Please, Nakul, you're the country head for Shell Energy here. There's one thing that is sticking in my head. Rashid said, one thing that buyers are interested in is ensuring no willful misconduct. I just want to kind of ask about that. For when you're talking to Indian consumers here, and as a supplier of fuel, how important is that? And is that being worked into your contracts when you're speaking with companies here? And also as an off-taker, is that something that Shell is also interested in including as well to ensure no misconduct, especially since the energy crisis of 2022 led to some practices that had upset buyers and resulted in arbitration?
Yeah, thanks, Stephen. First of all, absolute pleasure to be here to join old and new friends on the stage, and so many people here in the audience that I can see. I think it's incredible for an early morning session. The room's almost full already. So, big shout out to everybody who's here and has made the effort to be here. It's a pleasure to be on the stage today. I think you raise an important point, Stephen. I think the 2022 crisis brought this out quite starkly in terms of reliability of supply and adherence to contracts. What did it mean for India? Let me try and put it into a little bit of context, right? I mean, India's traditionally relied on long-term supplies to underpin its LNG imports into the country. Last year we did about 26 million tons of imports, about 80% of which are typically supplied under long-term contracts. When the Ukraine crisis happened, not only was your spot component obviously under strain, as Sandeep ji very rightly described, you also saw at least one long-term contract come under strain as well, which is the one I guess you're talking about in terms of the one that suffered arbitration. So that meant the country had to face something like a 5 million ton hole all of a sudden, and decide what it needed to do to keep producing the urea it needed, to keep running the cars that run on CNG, and to keep the lights on in general across the industry. That wasn't an easy one to fix. Therefore, I think this is something that has become more and more important. Buyers are becoming more aware that not all suppliers are the same. For example, reliability features much more, security features much more in buyer-seller conversations. Reliability and energy security features much more in stakeholder engagements and government conversations and their priorities. And therefore, as Sandeep ji described, you are seeing India kind of re-embark, in a sense, on this wave of long-term contracting, which it had sort of stayed out of in the last few years, while many other countries in the world were contracting. Having said that, I mean, this is obviously something that continues to be a concern, needs to be watched out for going forward. And sanctity of contract and preserving sanctity of contract needs to be a priority. And there are definitely things that India needs to do going forward to strengthen its position on that, including how disputes are resolved in the country, the speed at which those are resolved in the country. That needs to keep getting better for India to keep attracting as compelling and competitive supplies as it needs to on LNG.
Thank you, sir. Sorry, Teresa, I want to go back to you on that, because that's all, as someone who's negotiating contracts, have you seen a market shift in what buyers are asking for in terms of that security of supply? Are there terms now being added to the contracts that you're negotiating?
Yes, absolutely. We see, as Nakul has pointed out and as Rashid's pointed out, an increasing importance on the language, especially around willful misconduct. We've had several days worth of negotiations on that clause, and back and forth and all the way up to the CEO on that. So it is a big, big topic of conversation. And a lot of the other contractual terms, as India embarks on its longer term ambitions, price is a huge component of a huge factor for Indian buyers, as we know. And they're getting more and more creative on certain contractual clauses to help bring down the headline price. And it's really a very interesting market to be negotiating in at the moment.
Thank you. Now, Abhilesh, I want to just move to you. There is one topic, kind of taking a step back and looking at new demand sectors for India. One topic that had kind of come up this year in my reporting has been LNG trucking in China. It's taken off earlier this year. And I'm just wondering, does India also hold that potential, as well as using LNG as a transport fuel here? And what do you see over the next several years to 2030? What kind of market could that become?
Yeah, I think this is the one area, other than most of the other places, where we are significantly lagging. And this could have happened 10 years back when China started its journey. But we have been struggling, looking at that who should do this infrastructure development, and where do we get the LNG trucks also, which are running on this fuel and retrofitment, etc. But we see that this market has a very significant potential going forward. It requires very least intervention from the government, and this market can survive on its own legs. As AG&P and ThinkAs, we have set up 19 LNG stations, LCNG stations, which we are using for the purposes of serving multiple customers, which includes CNG customers, which includes serving the industrial customer, domestic customer, commercial customer, everyone. And we are in a finest position today to set up these LNG dispensing stations also with the marginal increase of the capital cost. We can also handle the prevalent issues which industry have been raising about boil off, which I think is a non-issue. If there is a cooperation amongst the city gas entities and the other entities who would like to do it in a much bigger fashion. There have been other issue of underutilization of the infrastructure, because the demand is going to ramp up over a period of time. So instead of looking for different kind of a policy support from the government, which can come from one form or other, at a cost of some other entities. It is important that this sector requires a very coordinated approach amongst the various stakeholders, and we have to also ensure that the cost of delivery to the end customer is very, very competitive. And I clearly see that one or two these things, if we are able to meet the requirement as an industry, this market can definitely increase the volume of gas significantly, much, much larger than what we are missing, while because India doesn't use much of the power, LNG or imported fuel. This can definitely replace that kind of demand which other country gets from power. And huge kind of logistic requirement is there for India to go from what it aspired to become a developed country. And this is the time to see that this fuel reaches to its optimum capacity and utilization.
Thank you for that. Now, just kind of taking a step back from that, Sandeep, I'd like to go back to you. You kind of touched on it a little bit in your first few comments, but what is Indian Oil's outlook for the current LNG supply-demand balance, kind of through 2030, and what are the barriers that need to overcome to hit that? The IEA said that LNG demand in India is expected to double by 2030. What's your view?
So as far as the supply demand balance is concerned, globally around 400 million metric ton of LNG is traded with the capacity, liquefaction capacity of around 480 million metric ton, and around 200 million metric ton are the different projects which are either under construction or are at FID stage. So there is always a talk about that the demand supply balance will get disturbed in another couple of years, where supply will be in abundance and demand will not be there. But at least I don't agree to that situation wholeheartedly, because I think that there is going to be enough demand. First of all, this entire 200 million metric ton, whether it will eventually come or not, is also a big question. Even if it comes, it will come in a very staggered way. And let me tell you, the Asian demand is increasing. Like countries like India, now look at India. India did around 46 million metric ton a couple of years ago. Then last year we did around 52 million metric ton. And this year we are likely to close at around 56. I mean, growing in double digit for the last couple of years. And if the prices remain within the affordable limits, we can continue to grow at a rate of 10%. And likewise, other countries like Philippines, Vietnam, even Thailand, I mean, all these countries are growing. The great growth is coming from all the Asian countries. In fact, Egypt, which was one of the exporters, has become importers. So therefore, it is going to balance out. Demand versus supply will definitely get balanced out as far as global scenario is concerned. But coming back to India, the IEA just has reported that around 105 or 107 BCM of demand by the year 2030, which I totally agree. We had a very long interaction with IEA team when they were evaluating, when they were assessing what kind of demand projections should be there in India. We also had our own internal assessment done a couple of years ago, and which we keep on updating. As per that, it is going to be around 77 to 80 million metric ton by the year 2030. But because if you look at all the sectors which are responsible for the demand, all the sectors are growing. Like fertilizer may not be growing at that pace, but fertilizer is going to hold its ground. And around 31 to 32% comes from fertilizer sector alone. And India is an agricultural based country, and urea anyways we are import dependent. So fertilizer, whatever is gas is being consumed in fertilizers continue to grow, and there is some demand which is expected from the fertilizer sector as well. Some rise around 1 to 2%. But the main sector which is going to grow is the CGD sector. Now the entire country is divided into 307 geographical areas. around 99.9% of the area is already covered. Only left out areas are Andaman and Nicobar and Lakshadweep. And let me share with the group that next year, me along with my team and PNGRB chairman, his team, will be visiting Andaman and Nicobar to explore how can we take LNG gas there, how can the CGD sector can be developed as far as Andaman and Nicobar, and then Lakshadweep will follow. So the government's intent is very clear. Now this sector is doing around 10 million metric ton out of 50, and Stephen, I am very confident in this next 5 years, this sector will grow to more than 20 million metric ton. It will just get doubled. The other sectors like refining, now India is actually a refining hub. Today we have 262 million metric ton of refining capacity in the country. Our consumption is less, we are exporters. And Honorable Prime Minister during his address of IEW only, he also has indicated that 20% growth in refining capacity, and Indian oil is contributing a lot in that. Our refining capacity is around 80 million metric ton, and around 25 to 27 million metric ton of projects are already under construction. And all these refineries are going to use gas for their captive generation, captive power generation and hydrogenation. So therefore, there is a great scope of refining and petrochemical, and this sector will also see a very large growth. Coming to the industrial sector is also growing because India also has another target of sustainability. We want to be net zero by the year 2070. Every company has an individual target, like Indian Oil has a net zero target of 2046 in the 99th year of our independence. And one sector which I always call hidden gem, that is power sector. We have in our country 24 gigawatt of gas-based power plants are available, and unfortunately around only 15 are operational, 15 gigawatt because gas prices are not affordable at this point in time. Around only 15% PLF is there at this point in time. But in case the affordable gas is made available, it has a capacity of growing from 7 million metric ton presently to 30 million metric ton. I mean, look at all these growth charts where India can be there in realizing the vision of Honorable Prime Minister, who invariably mentions that from 6% in the entire energy basket, the gas should have a share of 15% in the entire energy basket. And mind you, yesterday I was noticing the day one of India Energy Week, the inaugural session, where I think 50% of the time, all the speakers, including our Honorable Minister, they talked about gas. So the mind share is already 50%. And time is not far off when we will be crossing 10% and moving on to 15%. Thank you.
Thank you. Applause, yes. Sandeep, sorry, I just got to stick with that. You know, you're talking about the power sector. And yes, clearly there's plenty of growth potential. But talking to folks at the conference, price is such a big issue. And when you look at domestic coal, for example, it's just so much lower than LNG prices. It just doesn't quite make sense. At what price does power make sense for LNG, and can we get there? A spot market seems very unlikely.
Well, prices of course, today's price is $16.3 MMBTU, and I don't know the reasons. I mean, a small geopolitical happening in anywhere in the country, the prices, they get jacked up. Who is responsible for that? Well, I don't want to get into that, but yes, producers, they know that if in case they are able to make gas prices affordable in this country, that's why we are going for long term with producers. And of course, we are going to the traders also for that affordable pricing. But coming to power sector, in case the gas is made available at around $6 to $7 or maybe at $8 per MMBTU, because you know GDP is growing. Last year we grew at 8.2% of GDP growth was there, beating all the estimates. And this year also the growth is going to be 6.4%. From where this growth will come? We require energy for that. Power is growing in double digits. Already around 400 gigawatt of power is available in this country. Renewables are growing, but renewables are not going to provide electricity 24/7. So gas anyways has to come in between. Only thing is that from 6 to 7, maybe around $8 to $9 also during peak hours. gas will become affordable for gas-based power plants. And we are also working hard, Indian Oil along with other companies, to make this gas, affordable gas, available to power plants, so that these power plants which are idling, I mean, capex has already been done. Look at the apathy. Already the power plants are available. No new power plants are to be put up. But all these power plants are to be made operational. For that, affordable gas, I would say the range is from 6 to 8 to 9. I mean, in this range, if we are able to get LNG, then definitely these gas-based power plants can be run. It will be for the benefit of the country, and at the same time, the gas numbers of 80, it will go much beyond 80 million metric ton per annum.
Thank you. So six to $8 or $9 is the magic number for LNG. That's per MMBTU. Spot prices for JKM North Asia is at about 16.4, 16.5. So we're a little bit far out there, but certainly more negotiations for long-term deals. Sorry, I just want to switch now. I'm going to go, Nakul, I want to ask you just a quick thing. I'm changing topics to Trump. He is meeting with Modi. He's promised this drill, baby drill kind of plan and strategy. In your view, does Trump as president in the U.S. potentially unleashing more gas, does that change the situation here? We spoke with Gale yesterday. They believe that Trump as president, his plan could help reduce prices globally. What's your view, and do you see the political situation in the United States changing the supply situation at all?
That's a tough one, Stephen, but let me give you sort of the Indian perspective on this. I mean, in general, whether it's in the US or it's in any other part of the world, seeing more supply projects come online for a country that's looking to import lots of LNG and lots more of LNG going forward, that's a good thing, right? Number two, to have that visibility that there are going to be projects that are going to come online 5, 7, 10 years down the road that haven't even been FID'd today, gives customers the confidence to set up the infrastructure that relies on gas at the end of the day, right? That's an incredibly important aspect for a country like India. We sometimes lose track that the gas story in India is not a substitution story. The gas is needed along with every other form of energy over the next 20, 30 years as India grows. So it's an and story in India, not an or story. Sometimes we don't realize that 3/4 of India is yet to be built, just in the next 20 years. And for that, if you are a customer who's committing to a technology that's relying on gas as an input, you want to be sure that your price is affordable today, maybe next year, maybe 3 years down the road, but what about 5 or 10 years down the road? So to have a funnel of projects around the world, for that matter, which are coming online or are going to come online, gives you a great amount of confidence that this fuel will remain affordable and available and reliably available in the market when I need it. So in that sense, from a macro perspective, I think that's a good development. In addition to that, obviously, if there are fewer geopolitical disruptions, of the type which have created the price spikes that we've experienced, I mean, that's again good for a consuming country and an importer as well. So I think directionally speaking, more supply, less disruptions, good for a large importer like India.
And sorry, Rashid, I want to go to you too, just very quickly. ADNOC has invested or has looked at or is purchasing LNG from the United States with Trump in office. Do you think that there's more opportunity to participate in other projects? Are you always open? Are you open to adding to your portfolio further?
See, ADNOC is always looking for opportunities. We are trying to grow our LNG portfolio. We realize that the LNG industry has changed from when we started back in 1977 with the good old days of tramlining. You'd load the cargo on Das Island and you'd say hello to it back in Tokyo Bay, and that same ship then would go back, pick up the next one, and back and forth, and life was easy. the LNG industry has changed, markets have been liberalized, new countries have come into the fray. The interplay between gas and other fuels, the interplay between gas and renewables has all changed the way that we actually sell and exchange LNG between the buyer and the seller. And in order to be competitive and in order to be able to offer the markets what the markets want on a specific day, you need to have different nodes of supply. You can't just rely on your own one node. And therefore, looking at different geographies, different, the Atlantic Basin, Pacific, to serve these markets is only a natural, I think, progression that most LNG players will be doing. We're excited about the investments that we have made. ADNOC itself has set up ADNOC Trading, which has been also quite robust in offering different markets the sorts of indices and characteristics that a traditional supplier in the past, would not have offered. So, we look at this changing landscape and we go with the flow.
That's great. So I have a follow-up question unrelated to Trump, but it's about AI. And I learned actually at this conference, it's really cool, everyone should Google this. There's a company called AIQ, which ADNOC has an investment in, and they're using AI to basically assist with making efficiencies in their upstream assets. It's really neat. But I want to ask a question about the other kind of AI, which is data centers and things like that. How has the emergence of AI and this perceived AI boom, how does ADNOC view that and the future of gas demand going forward? Do you have an outlook?
So on AI itself, the United Arab Emirates wants to be a global leader when it comes to AI. It is the next frontier in the world's industrial development. It is really a revolution that will change the way that we do business, that the way we manufacture, the way that we interact with one another. And taking a leading role in this is quite important for us. When we look at when we look at the demand, the power demand for AI is. In the past, you would look at some of the countries and they'd say, look, our demand for power is going to plateau or is going to shrink. And now those same countries are coming back saying, actually, we're going to have a power increase of 2 to 3 to 4%, in different countries, which will need, of course, sustainable, continuous feed of energy, and LNG is, will be a natural provider. We've looked into it. There are, I think different research houses have different numbers. So, don't quote me on a specific number, but you could see an increase in LNG demand in some places above the baseline that was published a few years ago by up to 14%, and that is just coming from the power needed for these data centers. So it's quite an exciting outlook, and again, we're part of the journey.
I mean, certainly, I've covered Japan for a long time, and that's one of those countries that has kind of reversed their view. They were always in kind of this decline until essentially this year when they've updated their forecast to see potentially power demand growth. Thank you for that. Abhilesh, I want to come back to you really quick, and I want to pull the conversation back to pricing and affordability. And for your organization, we heard Indian Oil talk about the price LNG needs to be for it to make sense in the power sector. For your company and for the business that you do, are spot prices still prohibitively high? And also, are long-term contracts still too high? When you look at a long-term contract, if it's 12% Brent, with Brent prices around $75, you're getting close to $10 per MMBTU. What prices kind of make sense for your business, and what are you looking for in terms of sourcing gas?
Actually, if you look at this LNG being a global fuel, you have to compete with the number of importing countries to source this gas. You can be efficient with some basis point. It's not that someone who can supply to an alternate market is going to give you a cheaper gas, much better commercial terms than what he can get elsewhere. There are traders who will take the opportunity of lower price and then they will displace the gas to more as a country which can pay more. What is essentially required for the purpose of getting into this increased demand of gas in India is how do we improve the inefficiencies which are setting up in this country. And we are the 100% foreign direct investment entity in CGD, only CGD entity which has 100% foreign direct investment, invested significant amount of money on the infrastructure development. What is missing in this country is 4 or 5 things. And if we can improve on those part, I think the affordability with respect to sourcing the gas can always be mitigated. Because ultimately it's a global fuel and you have to compete with all kind of other countries, all kind of other fuels. So we clearly see that there are huge amount of tax inefficiency in the country. While government says that stated policy for the government is we want to move from 6 to 15%, but when we see the actual practice, the alternate fuels which are more dirtier are under GST, while this product is under VAT. What you say, what you do is completely 2 different baskets in this country, which is absolutely essential to address. I can understand the compulsion of not bringing natural gas under GST, but then how do you discourage the alternate fuel which is a dirty fuel? Something has to be done on that part. The another important part is that we pay multiple layer of logistic cost in this country. The transmission charges of pipelines are so significantly higher. The regasification terminals, the interconnectivity of the terminal, the competition between the terminal is completely lacking. So we are in a situation when we are killing ourselves and the gas sector is not growing. As a CGD entity, we see that we have to give lot of commercial flexible contract to the end consumers who are small end consumers. If we look at the same kind of a sword that 90%, 80% take or pay, this market is not going to grow. We can keep on talking, we have been talking from last 5, 6 years, 10 years, it will not happen. So 4 or 5 critical steps government has to take, or instead of we go to the government, the industry leaders have to take to see that gas becomes less logistic cost is there in the inside the country than which is today. In most of the other countries where gas is being used as in a big number, logistic cost is very, very insignificant. Here the logistic costs go, the tax costs go almost 50% of the sourcing cost. That's where we have to address, I think. That's the important part.
Thank you. I see we're running out of time, so I'm going to just quickly sum this up. I think today we've heard some really interesting conversation, but the big thing that I'm taking away from this and the conference in general is that Indian gas demand is poised to grow, and it's going to grow big. It's going to take up more of the energy mix by 2030, and that means more LNG demand. But at the same time, LNG needs to be affordable. The contracts need to be reliable, and so that means you need partnerships between buyers and sellers. I think, again, the IOCL and the ADNOC contract that was signed this week is an example of that partnership. It's likely no coincidence that they're sitting on stage here today next to each other. But these long-term contracts where you can find partners is something that we're likely going to see, going to see more of going forward. Liquefied natural gas is the fastest growing fossil fuel. The Indian market shows enormous potential, but for that potential to be met, it needs to overcome some of these hurdles. Thank you everyone for participating today, and thank you for your attention.
Thank you.